Hello and welcome to our Fund and Focus series. I'm Hunsley of Livewire Markets, and our guest today is Tamara Haven-Bierstadt, Director and ETFs and Index Investment Specialist at iShares by BlackRock. Our topic today is infrastructure and real estate assets, which you can specifically access under two ETPs on the ASX, GLIN and GLPR. Tamara, welcome. It's good to have you with us.
Thank you, Hans. Lovely to be here.
So BlackRock often talks about this idea that we are in a new market regime. So I'd love to hear from you. What is that new regime, and where does infrastructure investing particularly belong in that regime?
Yeah, I think that's a perfect place to start, Hans. The new market regime, as we see it, is, I guess, this period from COVID onwards that we find ourselves in, where inflation is structurally higher than it once was. And when I think about, I guess, the couple of decades, even longer actually, before COVID, really that was characterized by low interest rates on the whole, and stable and steady inflation and growth as well. So it really was, I guess, a market that was quite kind to investors, to market beta, if you like. Now we think that investing regime is over, so we're in the new market regime where we're seeing greater dispersion in markets. It does mean that you're going to have to be a little bit more granular, a little bit more proactive in terms of investing. And of course, that structurally higher inflation has certainly, I guess, changed the way investors need to think about their total portfolio.
With that said, then, why should investors consider investing in infrastructure and real estate assets?
Look, we think these two asset classes are certainly, worthy of, significant consideration from investors. When I look at infrastructure in the first instance, typically infrastructure has some sort of built-in, I guess, protection against inflation. There are often inflation-linked contracts which underpin a lot of the revenues that make up an infrastructure index. Think of long-term power purchase agreements, tolling agreements, supply agreements, when we think of what actually makes up the infrastructure index. And that is because infrastructure is really made up of kind of core kind of society adding critical pieces of infrastructure such as toll roads, airports, gas pipelines, supply lines for all sorts of types of energy, in fact. And similarly with real estate, or REITs as we call them, there's often an inflation linkage in a lot of these particular rental agreements, which again provides a bit more ballast for people particularly relevant in this higher inflation regime.
Right, so you were talking to some of the similarities between infrastructure and real estate, but I was wondering, could you break down that opportunity set a little bit further for us?
Yeah, sure. In infrastructure, we often talk about core versus value add. This particular infrastructure ETF is focused on the core end of the spectrum, which again are those assets or those companies that own assets that really power societies and economies. So think about transportation of energy, be it gas or water or oil, as well as things like airports, container ports. So really the core end of the spectrum. And then similarly with real estate, that opportunity set is really around listed real estate companies that own assets across the spectrum, but critically with our ETF, over 70% of the revenues of those companies have to derive rental income. So again, it plays into that income producing aspect that we think is, a real benefit for investors.
What are some similarities between infrastructure and real estate assets? But also I was wondering if you could tell us, what's one key difference between those two particular asset classes?
Sure, Hans. The similarities from a portfolio sense are that they are both portfolio diversifiers. They both provide, I guess, a lower correlation to broader equities. They both are a source of income as well. Often there's stable income streams associated with both infrastructure and real estate assets. But fundamentally, they are different things that you're investing into. Okay, so infrastructure or core infrastructure is really the key pieces, whether it be roads, airports, cell phone towers, things that are actually powering society in the way we live. Whereas real estate is property. So, traditionally that has been office, residential, retail properties. But increasingly, we have seen that the real estate index is changing, and that's including more assets such as logistics, data warehouse centres, and so on.
When I am looking at these products, GLIN and GLPR, I'm curious, what flows are you seeing, firstly, into the product since you've launched it? But more importantly, what am I paying? And what am I paying for?
Sure. Well, I might start with your last question first. So you're paying 15 basis points for both of those tickers, GLIN, so 0.15%, GLPR, 0.15%. And what you're paying for is basically a globally diversified basket of exposures to listed infrastructure in the case of GLIN and listed real estate in the case of GLPR. And what you're paying for is, access on the local exchange, the local Australian exchange, to these exposures, which we believe, as discussed, do provide, important elements to a total portfolio. Diversification, ballast, income-producing assets in your portfolio. And in fact, Hans, we've actually seen the market react incredibly positively. In fact, GLIN, our global infrastructure ETF, has been, I think, the most successful launch actually out of all our Australian domiciled ETF tickers. The fund is now very close to 800 million in terms of assets, with over 600 of that coming just in the past year. So the fund is really only about a year and a half old. And I think it plays to what we spoke about at the top of the session, that this is really an exposure, along with real estate, which has also been very popular, but if I focus on GLIN particularly, it is an exposure that has really resonated with investors in this structurally different investing regime.
And you alluded to it a little bit earlier as well, but some of those economic megatrends that investors can tap into through infrastructure and real estate, what are some of those megatrends?
We've identified 5 megatrends. So I guess the first one, and the one that's been very topical over the course of 2024, is the artificial intelligence and digitalisation trend. The second one is a transition to a lower carbon economy. That is happening. Changing demographics is clearly an issue that the world over is grappling with, particularly in developed markets. You see populations ageing. The picture is slightly different in some of the emerging markets, but we do see implications for investors when thinking about things like healthcare, for example. Another mega force that we've identified, I guess, is the changing nature of finance. So financial institutions are changing. So, we're thinking, perhaps the rise of things like, non-bank lenders is something that market participants should be attuned to. And finally, the 5th mega force is really that geopolitical fragmentation. Clearly, that is an important mega force that we've seen and we are continuing to see play out over the course of this year. And how that's affecting markets is through, obviously politically, but also through the reshoring and reshaping of supply chains. And we think that this has implications for things like inflation, but also the way economies are actually set up. And I think all of those mega forces, those 5 mega forces, all can be linked back to infrastructure and real estate in some way. So, we think they're really helpful, I guess, top of house ideas to keep in mind for investors.
Okay, well, just to finally ask, this is Australia. We all love our distributions and dividends. Can investors expect to see any distributions from these products?
Look, these products will distribute quarterly. There will be a quarterly distribution. So again, I think for investors looking for elements of income and inflation linkage type exposures, I think these are both well worth consideration.
Okay, thank you very much. That's Tamara Haven-Bierstadt of BlackRock. And thank you for joining us. We hope you enjoyed that interview. If you did, you can subscribe to the Livewire Markets website, as well as our YouTube channel, where you can find more funds in focus. We'll see you next time. Take care.